back, guys. We're back in action. Happy December. I'm filming this today on Tuesday, December 3rd. We're going to talk the Dividend Portfolio December review. I'm really excited about this video. I had a quick break from filming. I actually missed 2 Mondays. So the Monday before Thanksgiving, I had worked a ton that week, and I didn't want to rush out a video and, not really keep the quality standard, So then Tuesday, Wednesday, and Thursday, obviously Thanksgiving week, was spent, unplugged, just family time. Didn't even look at the market once. It was great. I was home in Indianapolis for those 3 days. It was awesome. See my parents, see my mom's side of the family, and yeah, it was great. Wednesday night, I went to a local dive bar in around my hometown, and it was pretty funny because it's like all of us from that hometown, we really don't see each other obviously at this age often, and then we go to this kind of random bar around us. I was the designated driver, so I did not drink any alcohol that night, but it was funny to see a lot of people that we probably haven't thought much about each other. I did get a good compliment. Someone came up to me and he was like, "Hey man, I love your videos. You make things very simple." So that was kind of weird because yeah, I knew the kid, so it wasn't getting recognized or anything, but it was I just wasn't thinking about it. I was at a bar and someone comes up to me and is like, "I watch all your videos." And then, yeah. Anyway, it was cool. So moving on, guys, we are back in Bloomington, back to the regular scheduled programming, filming and releasing videos once a week, Monday at 6 p.m. We're sticking with the plan. It's going to be that way through 2025 and into the future. I've really enjoyed this channel, and I really appreciate you guys as always. One other big announcement, guys. As you can see, the total portfolio value is at $71,083.14. So that is exciting. I remember when the November video came out, it said in the thumbnail $70,000 something dividend portfolio. And I do remember filming it. I was like, so we're not actually quite to 70,000, but hopefully by the time this comes out, the thumbnail will be accurate. That was not the case then. We were at 68.5 or 69.5 or something. I don't know. Now we are at $71,000 plus in the portfolio. Pretty exciting. You can see since May 15th or May 14th, 2024, the portfolio was at $55,000, and now it's at the 71. That reflects a change of $15,000 or 27%, and that's just from mid-May. That is when TD Ameritrade, swapped all their accounts to Schwab, after that acquisition. Okay, that was a lot of random words. We are going to get into it soon. I do want to stress, I have hit this $70,000 goal. You guys have been with me. That's been on my mind for a while. We're going to continue goal setting. Every time we hit a goal as an investor, the next thing is, okay, this is awesome. I'm excited, but what's next? And for me, I do want to get this to the 6-figure mark. Being so fresh with hitting this $70,000 goal, and also not having a complete understanding of, I guess, my financial situation moving forward, how much I'm going to make, how much I'm going to be able to save and invest. I don't really have a specific time frame on that $100,000 mark, but I am going to probably, try to put a deadline on it, or at least a goal. That's what a goal is. I don't know. But $100,000 is the next goal in the portfolio. We will hit it soon. I'm thinking, in my head, I'd like to do it by June, but that's kind of a rough estimate. I think that's kind of lofty, but I think it's achievable. Okay, enough chatter. Let's get into it, guys. The reason we are here, the December dividend portfolio review. So like I said, I've been away from the channel for like 2 weeks. There has been a lot of good changes. We are over that $2,800 mark, guys. We're at $2,823.65 in estimated annual income. Guys, that breaks down to the monthly average of $235.30. Going with the theme of goal setting, when I look at this tab, obviously I want to get this estimated income over that $3,000 mark. That will put our monthly average over 250. So that's going to come by the way of more invested capital, as well as companies I'm currently in raising their dividends. Okay, that's kind of what this dividend growth game is. Keeping your head down, investing net new capital, as well as, modifying your system to be more successful and continue to get that dividend growth. Okay, so that's kind of what we do here. Let's look at like a quick outlook. So in December 2024, I will make $169 in dividends. Okay, I've already realized what's going on here. I will hang on. Give me one brief moment. It's a little confusing to look at. We'll just look at the next December. I will make $283 in dividends in December. I already have, collected some of those. And then in January, $311. February, $111. And then, obviously 3 months later, March, we will be back to that $284. That's the expected estimated income, guys. This is kind of how the breakdown is looking right now. Does it bother me that kind of February, May, August, and November are kind of my lower months and they lag behind a little bit? The answer is no. It doesn't bother me, and I would encourage you to kind of get out of your head about having some smooth, perfect income stream. It's not going to be like that. You're going to have to take the best opportunities you can without getting too caught up on, oh, I already have the most income in this month. No, it really doesn't matter, because over time, each month should progressively increase, okay? Especially starting out when you don't have many positions in the portfolio, there's probably going to be months where you earn $0 in dividend income. That's okay. It takes time. Stay the course. And yeah, let's get into the positions, guys. There has been a few changes. I'm excited to get into it. But starting out with the big winner in the portfolio as of late, Altria Group. That is ticker MO. I have 250 shares, currently trading at almost $57. That puts it at a market value of $14,216, guys. And it pays me an estimated annual income of $1,020. We will peek at the chart for each of these. I'm not going to lecture you guys about technicals today. But here's the position, okay? I think this one is a great example of patience, conviction in a position, and then now we are starting to see the reward on Altria. Okay, so my average price on this one is $44 and change a share. It is at almost $57 a share, guys. That puts me up, roughly $13 a share on 250 shares. That does give us that over 3,000 unrealized profit. But, we would not be here. We would not be sitting in this good of a position on a stock if I would not have had this conviction in it for years. If I would not have had the discipline to build out this position, to wait for good dips, good buying opportunities. And, now I'm at a place where I'm not really adding to Altria because I was more interested in kind of locking in the 10% starting yield on it, but it's not going anywhere, at least for a long time. I'm proud to have this position in my portfolio, and, it's obviously treated me well with massive dividends and I would say pretty massive capital appreciation. Okay, so that's a good start. And obviously this recent push this year has led it to the #1 spot in the portfolio. So I guess that's exciting. I do want to use this as a quick kind of teaching moment. And I want this kind of to be something that I think differentiates me from other dividend investors on YouTube. I think a lot of other dividend investors on YouTube might get in kind of a sense of, okay, here's my 8 stocks in my portfolio. You should buy these 8 stocks too. And I kind of want to steer you guys clear of that, because while Altria makes sense in my portfolio now, it makes sense at the cost basis I have it at, and it's done well for me. I do want to say, like, I'm not buying Altria today, okay? It's kind of a position I've built out, and it's in the portfolio, and it's, doing its job of producing that dividend income, okay? So just because you see, maybe an investor you like or respect on YouTube who has this stock, make sure you understand the full story and make sure that you're not just, buying a stock because you want the stock, but you're more focused on the valuation and that starting yield you could lock in. We could talk about the Altria example all day because it's honestly been, I don't want to toot my own horn, and I do make a lot of mistakes, but Altria here is like a perfect example of how to build out a dividend growth position. And I am going to use it as a lesson, I guess. But I'm not buying it today, and I haven't bought it since January of 2024. So for what it's worth, that's my spiel on Altria. All right, moving on, we have Realty Income Corporation, ticker symbol O. Here's one I wasn't as patient on, and it hasn't turned out as well as Altria. Okay, had I been a little more patient and focused on building out the position at a better valuation, this one probably should be in that #1 spot. Okay, it certainly has the most capital invested out of my pocket. Okay, so I've got 215 shares. It's trading at 56. Puts me at a market value on it of $12,000. And then that pays me an estimated annual income of $680. We say it every time, but that is a monthly payer. So here's the deal with this one, guys. It is my sole, true real estate exposure. It's a company that owns buildings and signs triple net lease agreements with other companies, and we are going to talk a little bit about the technicals of it here. So as you can see, I bought in originally in 2022, July. On the 18th, I bought in with 125 shares. It was trading at $67 and change. I think that was too big of a lump sum investment. Looking back, you can see it continued to fall. And had I been a little more patient and strategic with my capital, I could have probably locked in, a much better cost basis and a much better starting yield on this one. However, with that being said, with having that much already invested in it, I kind of had to, chill out a little bit on it for the sake of not overweighting it in the portfolio, okay? And that's kind of how I look at it. It was a good lesson to me. My cost basis on it right now is 65, so I'm down, 9 a share. That's an open loss, unrealized, of $1,975. So impatience has led to essentially $2,000 of destroyed value on this one, if you will. I mean, it's not destroyed, it's not a realized loss, but I could have done better. I could have been more patient. Again, this was kind of a time where I was kind of consolidating my assets a bit and kind of reweighting my positions. and I think I got a little trigger happy on Realty Income. That's okay. It's a lesson learned. I like this company, and I'm going to continue to hold it, but you know, I'm not in a rush to lower the cost basis, even though I'm down on it. Okay, you know, that's God's honest truth. Let's move on, guys. What do we got next in the portfolio? It's going to get interesting here in a second. Next up, we have Hershey. Okay, this is a pretty big switch from, I guess, the November review. I believe Hershey was at, you know, maybe number 5 or 6. Now it's at 3. I'm up to 67 shares on it. I do remember saying, like, when I first started building this one, I'm like, you know, 40 or 45 shares is the short-term goal with this one. We're going to get it there and let it kind of hang out as medium. That has not been the case. I've just seen a lot of potential and a lot of good opportunities in Hershey. There's been some bad news and there's been some bad headwinds. However, the way I see it is it has not been Hershey's bottom line enough to kind of warrant the sell-offs it's experienced. Okay, that's how I'd word it. So I'm at $12,000 in market value on it. It's now paying me $367 in the next 12-month period. We will go to the Hershey chart and we will kind of revisit, you know, how we got to be in this place. My average price on it is $184. It's at $179. I don't want to say basically break even, because that kind of seems like a cop-out. It is an unrealized loss. However, you know, with a long-term mindset like this, I'm not going to be beating myself up over, you know, a $5 unrealized loss on such a new position, because I kind of am in the stage right now with this one of accumulation, locking in the yield I'm looking for. And that's kind of where we're at on Hershey. I'm proud to own it. I may continue to add, maybe take it to 70 shares. Definitely take it to 70 once we get some capital freed up. You know, we'll have to wait and see, because I'm not going to, like I said originally, this was going to be 40 or 45 shares, and now it's 67. You know, who's to say I don't build this one to 100 shares? You know, I don't know. We'll see. We'll continue to do due diligence, and we'll continue to watch kind of the price action and valuation. So again, I built this one out while it was consolidating. I really liked it. I really liked where I was locking in shares at. And then it did, you know, briefly break down the consolidation. And I had to add more. I had to have more of it. Essentially, that's what happened. And I will keep you guys updated if I continue to add. Coming up, Apple. Okay, and this was, you know, this was one I did trim again. Okay, in the last video, I believe I was at 50 shares. The previous trim, I took it from 63 shares down to 50. Just last week, I took it from 50 down to 45. I want to say I'm done touching it for a while, but yeah, I definitely want it to stay where it's at. It's my 4th largest at $10,918.51, guys. Pays me an estimated income of $45. Not a lot, because this one is Apple does not contribute a significant amount of its free cash flow to rewarding shareholders in the form of dividends. But, you know, I think in the future they will pick up the pace a little bit. They will get, you know, a bit more aggressive with dividend increases. So we'll have to wait and see. Real briefly, because this video is already getting a little lengthy, I feel. We'll look at the trim on it. I took the 5 off. Yeah, you can see here. When I took the 13 off, that was in early June. That took me from 63 shares down to 50. I took those 13 off at $215 even, almost. I just took 5 more off kind of on this spike. We see a pretty aggressive ascending wedge on Apple. I do think it is kind of due for a correction. However, you know, price action kind of shuts me up because it just made a new high literally today. So I guess as I'm filming this, we're kind of seeing, just because you expect something doesn't mean it's going to happen in the short term. So I took off 5 more at 235 and I put those all into Hershey, and that's where we did boost, you know, whatever, from 60 to 67 shares, not exactly sure. Yeah, we put 7 more in Hershey, or 9 more recently. So that's where the funds kind of came from, as well as other dividend payments, guys. Moving on. So yeah, I'm not looking to buy or sell Apple right now. I've trimmed it to where I want. I do expect a correction at some point, but Apple is kind of set with what I'm pretty set on my Apple position right now for my net worth, for the portfolio size. So we're going to let that one be. Moving on, guys, we have Starbucks coming in at number 5. Okay, 70 shares, trading just above 100. That gives me a market value of $7,123. And that pays me $171 in income, guys. Starbucks is another one. I like it. I liked the prospect of it. However, it's kind of at the point in my portfolio where I'm happy with the position sizing. For my risk tolerance, I'm not looking to, you know, completely overweight essentially a coffee company that is kind of a trendy thing. I really like Starbucks. I enjoy their products, but I'm happy with it being kind of a medium-sized position right now. So it's going to stay that way unless I get some sort of, like, you know, screaming buying opportunity. It's also not on my radar to trim or sell anytime soon. You guys know I really don't like to trim or sell out of positions unless it's, you know, a very strategic, planned move. You don't really experience the dividend growth in this game unless you can hold on to your positions for years or maybe forever. That's kind of the goal. You know, obviously there's different situations. Moving on, guys, we have Microsoft, 15 shares, coming in at a market value of $6,469.20. Okay, that pays me $50 in estimated annual income, guys. That's kind of same boat as Apple. I mean, I could have probably, yeah, I guess you guys might remember, but when I did trim those 13 Apple shares, I also took 5 of Microsoft. Okay, it didn't make sense for me to trim any more Microsoft like it did for Apple for 2 reasons. I trimmed Apple at kind of an all-time high, as you can see. I mean, not an exact all-time high, but relatively close. And then Microsoft is not exactly, you know, making all-time highs right now. I do expect a correction from both. It's pretty straightforward on Microsoft's chart. We can see on the max chart with weekly candles that it typically kind of outruns its 200-week moving average. That's this green line, and then tends to correct. Okay, I could see something like that happening soon with Microsoft, and it would make sense that that correction would correspond with Apple's correction. Okay, again, this is technical analysis. This is not some guarantee. I'm just telling you what the charts are telling me. So let's move on. Next up, in the number 7 spot, we have Pfizer. One I've continued to build out, and you know, obviously since the inception of this channel, Pfizer's kind of been I don't know, I'm looking for an analogy. It's kind of been the what's a good analogy? I'm thinking like the snake in my boot, but I don't even think people say that. You get what I'm saying? Pfizer's been kind of a tough ride for us long-term investors. However, I am really excited about the future of being a shareholder in this one. I think similarly to Hershey, I think it has some headwinds and I think it has some fears, but I don't think, you know, the correction it's made is fully warranted. Okay, I mean, I'm seeing this one as kind of dirt cheap right now, and I have continued to put my money where my mouth's at. As you can see, even like last week, I picked up more shares of it. So, you know, we'll have to wait and see. I want to get to a point with Pfizer where I'm done building and it's starting to appreciate, and kind of I can sit back and enjoy the position. But, you know, it's taking longer than I thought it would. Um, you know, it's not important. The point is, I'm continuing to build this position with my risk tolerance in mind. I'm kind of playing by my bankroll on it. And, you know, we'll see how much higher it goes in the portfolio, guys. Okay. Last but not least, guys, T. Rowe Price, ticker TROW. I've got 15 shares of it. It's trading at 123. Market value right now, $1,800, and it pays me $75 in estimated income. You guys kind of know the story with this one because I tell it every time. It's one I saw a lot of opportunity in. It's one I have a pretty impressive cost basis on of 107. However, because of my past, and I don't know, it's hard for me to continue building this one too much and too aggressively just because of the space it's in. Nothing against T. Rowe Price. It's just, I don't know. Financials for me personally are sometimes a little harder to trust. I mean, JP Morgan is one I should definitely have in the portfolio, and I did at one point, but I just struggle sometimes trusting financials. It's something I've got to get over. It's something I can't let stand in my way. I mean, here's a 5-share trade on JP Morgan. You know, pretty good trade looking back, but it's definitely one I could have held on to, maybe trimmed, continued building kind of 2022, 2023. And, you know, obviously hindsight's 2020, but I think it was just kind of the financial thing messing with my head. So, you know, that's how this game is. You're going to learn a lot about yourself, guys. Thank you for joining me in today's review. Last thing, I'm excited. Thursday, I'm going to a casino. So I've never been to a casino before, but you guys will have to wish me luck. If you have any good advice or precautions, let me know in the comments, guys. I'll probably update you next video how it goes. But again, I'm Cashflow Cart. Why did I say that weird? I'm Cashflow Cart. Please subscribe if you're not already. Take care, everyone, and let's build wealth.